So these are the latest 10 years. And since 2017, they have two types of dividend rate declaration. So for conventional, it's a little bit higher, still around 6%. The assets under management, currently they are managing around 2021 is about 1 trillion. So this is the latest. This is the summary of EPF's 2021 investment performance. The bigger chunk of return actually come from equities. So stocks anywhere in Malaysia, globals, and also come from some long-term project in like real estates and infrastructures, that they can collect rentals and all the stuff. So this is like the portfolio of EPF. So if you can give one word for the EPF investment, what would you say? Mixed asset. It's quite diversified. It's a table. Say it lists the top 30 equity holding by percentage issue shares. We are the major shareholders of all these companies, some of the biggest company in Malaysia. About 37% of EPF's investment assets were outside of Malaysia. So this is the link where to apply for the special withdrawal. Withdraw EPF to invest in money market funds or bond funds. Should you do that? No way. You probably will get less than 6% return. Well, how about this? Withdraw EPF to invest in balanced fund. If it is on par, you might get less in the future due to the fees. So I don't think it's wise also. Invest in equity. Equity fund might be a good choice for you. So provided that you are a very good investor. Withdraw EPF and then you invest in P2P financing. If you are going to do that, so your EPF money is in there and it grows, it's tax-free. But financing, all the money you make there is taxable. You take it out and then you want to diversify. So it will take time. So you will not be able to invest immediately. And then it is also actually quite illiquid and there's a risk of default. So I probably won't do that. So here is some guidelines. So if you want to really withdraw out and invest in equity, the best is actually you want to do it at the right timing. Global exposure, you want to expose to equity when there are market downturn. If you are not a stock picker, you can always check the general market PE, patience. Or if you really don't want to time it at all, then you do dollar cost averaging. This is for the super lazy people. And then consider the cost. Another situation is that you really need this money as an emergency fund because you really have nothing left in the bank account. So would you withdraw this EPF as emergency fund? So my thinking is, if you really need this money, it's going to help you get through these few months. Why not do it? So I'll say yes. So when you withdraw this 10,000 in the future and you start contributing to EPF again, they ask you to replenish this money first until 120% before your money start to go into account 2 because this 10,000 is from account 1. Another situation, what if you withdraw the EPF for settling loan? Like for mortgage, housing loan, would you do that? Car loan? How about credit cards? How about personal loan? How about PTPTN loan? But how about PTPTN loan with 15% early payment discount? Yes, because we are going to get a higher than 10% return most of the time, depending on your loan structure. So how about withdraw EPF for spending? Buy a car? How about down payment for house? Vacation? How about this? NFT, a lottery, casino, exotic cryptos. How about like you take that 10,000 and then you invest in courses or upskilling, so that you can do something out of your capability right now and your earning power increase. Another question, how about wedding? All these questions are very subjective. Definitely depends on the specific situation. So there's no right or wrong answer here. So we're just opening up for discussion so that we can hear what people are thinking. Of course, you make the decision yourself.